Well, I guess we can get started and people can just keep coming in as they arrive. But I wanted to welcome you all here and thank you for joining us today for our event, Take the Lead as Investors, Advocating for Gender Equality. We're co-hosting this event with Women Investing for a Sustainable Economy in collaboration with a nonprofit based in New York. The organization's name is Take the Lead, and they have an ambitious goal of reaching gender parity across all sectors in leadership positions by 2025, which is extremely aggressive when you think of any current estimation of when people expect women to reach gender equality. And so today we really want to focus on what we can do as investors to help push that agenda forward. So how we can help advance gender equity in our portfolios. So a little bit more about the day. So Take the Lead Day is an inaugural event where there are thousands of women across 11 cities today gathering to talk about different topics to advance women equality. And we're happy to be co-hosting with WISE to have this focus on investors today. But before we dive into how we are going to attempt to reach gender parity, I thought for those who might be new to Zevin Asset Management, I'll just give you a little background about our firm. And then hopefully Lindsay or Whitney, if she arrives, can explain WISE a little bit more. And we can launch into some of the advocacy that we're doing around gender equality with our Associate Director of Socially Responsible Investing, Pat Tomeno. So Zevin Asset Management has been managing responsible portfolios since 1997, though our roots are much further back with the advent of the socially responsible investment movement, when our founder, Robert Zevin, was really a leader in the divestment movement from apartheid South Africa. We integrate environmental, social, and governance analysis in our investment process. And we are very active on the shareholder advocacy and engagement side. And it's really this lever that we use in our portfolios for gender equality. So with that, maybe I'll turn it over to Lindsay for a brief intro.
Thank you. So on behalf of WISE, Women Investing for a Sustainable Economy, and my co-chair, Whitney Rauschenbach, thank you so much to Zevin and to Take the Lead. We're thrilled to be part of this discussion today and the inaugural day of this, so thank you for that. And for those in the room who are new to WISE, so WISE, Women Investing for a Sustainable Economy, was founded 5 years ago in New York, and the goal was really to create a professional network for women working in the impact, sustainable, and ESG investing field. Since that founding with 3 women ESG analysts in New York 5 years ago, we've grown to 9 chapters globally, including Canada and the UK, and we have about 1,000 members strong today. So it's become a lovely community, and my co-chair, Whitney Rauschenbach, is on her way in. We'll welcome her in a moment. But for those who were invited through Zevin or Take the Lead and are not yet part of WISE, I'd be happy to add you to our mailing list. We run monthly events, such as today's event that we're delighted to partner with Zevin and Take the Lead on. And we also have an informal monthly breakfast series. Welcome. So please feel free to connect with Whitney or myself after today's event, and we will be sure to get you added to our list. And welcome to Whitney Rauschenbach, my co-chair for the WISE Boston chapter, and also the founder of the WISE Boston chapter, which was the second chapter founded after the New York chapter, which was the founding chapter. So with that, I'll turn it back to you, and also invite perhaps everyone to just go around quickly and introduce themselves and their affiliation to the group. So with that, delighted to be part of the discussion today, and thank you.
Great, thanks, Lindsay. Yeah, I'd love to go around the room, and if you could say maybe where you're from, and then also why you were drawn to the event. I'll start. I'm Emily DeMasi. I'm a portfolio manager here at Zevin Asset Management, and I've been growing increasingly interested in how we can incorporate some gender lens investing and also advocacy around gender equality in our portfolios.
My name is Robin Miller, and I work at Series on the Capital Market Systems team on disclosure. So I'm a member of WISE, but this event I think is also good for us to be thinking about. I'll be heading up tracking our shareholder engagement with sustainability reporting. I feel like gender is a huge piece of that. So I'm excited to learn more.
Hi, my name is John Green. I'm currently in transition, and my background is in institutional investment management. This topic to me is interesting both personally and professionally because I realize that how we invest and how we spend our money are key ways to achieving equality in society. So it would be nice to hear more about how we can support women and gender equality.
I'm Julie DeLongchamp. I am an ESG research associate at Wellington Management, and we're really focused on this issue, definitely in our engagements as well as talking to all of our PMs and analysts about it.
I'm Lindsay White, co-chair of the WISE Boston chapter, and my day job also at Series. I'm part of the investor team there, working with our network members around sustainable investment across ES and G. So I'm very happy to be part of the discussion today.
I'm Hannah Saltman. I work at Series with Lindsay and with Robin on the Capital Market Systems team. And I specifically head up our work on governance, so working with corporate directors, investors, corporate secretaries, general counsels, to integrate sustainability into board decision making. So this issue of gender parity, in particular how it affects the boardroom and the actions investors can take on it is of particular interest.
Hi everyone, my name is Evelyn Barahona. I'm currently in the process of developing an initiative that I'm hoping to get housed in a few months. But in regards to this initiative, I actually do work for AAW in the city of Boston in terms of negotiating for women. And also I belong to a few networks in sort of promoting, key social justice items, and this is definitely a personal one that I'd like to be part of.
Hi, I'm Lisa Sebesta with Fresh Source Capital. We're an investment firm that makes investments in private companies in the food and agriculture space. And we've found a lot of women entrepreneurs who are very active in that area. And we're very proud that about 40% of our companies that we've invested in have a woman founder or a senior manager on the team. But we do see that, particularly in private companies, that there's a very much a big gap in terms of who gets funded, and most of that money still goes to men. So we're trying to address that with our work as well.
Hi, my name is Julie. I work here at Zevin Asset Management. I'm just here to learn as much as I can, take in everything.
Me too. Sonia Coa, also with Zevin.
I'm Shannon Kelly. I'm with Sustainalytics, here to learn more about what investors are looking at in terms of gender diversity.
Hi, I'm Lisa Hales, and I work for Boston Common Asset Management, which is another sustainable investment firm based here in Boston. I joined the board of the 30% Coalition earlier this year, which is a national advocacy group composed of corporates, investors, academics, who are all working to raise the representation of women to a minimum of 30%, inclusive of women of color, to 30% of public boards.
Great. My name is Whitney Rauschenbach. Thank you to Lindsay for the WISE introduction earlier. I was running a little late, and thanks so much, Emily, for hosting us. This is exciting. I work at MSCI on the ESG research side in marketing currently, and it's a busy time of year for all of us, so I really appreciate everyone coming out to spend a little time on this subject. And I think in addition to talking about what you may be looking for in your portfolio companies or during the investment process, maybe at the very end we can chat a little about what's happening at your own firms and how you might raise some of these issues, or where your own organization stands, just kind of turning that lens towards your own personal workspace.
I'm Pat Tomeno. I'm here at Zevin Asset Management, the Associate Director of Socially Responsible Investing.
I'm Sue Kazanis. I work here at Zevin Asset Management doing marketing.
Thank you all, and thanks for joining us. Just for people who might have come in at the last minute, we are recording this session. So as part of Take the Lead Day, Take the Lead organization is trying to collect resources to really help give women the knowledge and the confidence to take their fair share of leadership positions by 2025. So anything that we talk about here, we'd love to make available to women who weren't able to join us today, or just what I like to call gender equity warriors, who are our male counterparts in this fight. So thank you so much. And many of you around the table are socially responsible investor practitioners. So I don't want to get too much into the weeds on gender lens investing, but for those who might be a little bit newer to the space, I just wanted to sort of lay out a framework of not only as investors, but how we as consumers and lenders can also help empower the women in our lives and really try to, use our own resources to advance gender equality. So a great resource for this is the Criterion Institute. They are a nonprofit think tank that spends a lot of their time and research on investigating the gender gap and coming up with strategies on how we can narrow and hopefully one day close that gap. And really, they provide 3 tools that kind of touch every part of our economic lives that we can integrate into our daily practices that can really help close the gender gap. So the first is, our activities as consumers. So, as women, we wield a lot of power when it comes to our consumer spending. In fact, a recent statistic has shown that 70 to 80% of all purchases, all consumer activity is led by women. So I like to, I was disappointed as many of us were in this past election, but I like to think that I get to vote every day with the way that I spend my money. So 2 strategies that, we can employ on a daily basis is, first, spending our dollars on products and services that directly benefit women. So an example of this might be childcare services. Not only is it a crucial aspect to women in the working field, but many of the owners and the childcare services are run by women. So it's really an empowering economic activity that consumers can participate in to help gender equality. The second part is just being not only a consumer, but a local patron to your local community shops that are run by women. You can spend your everyday dollars at businesses that are women-led and run. So as consumers, we can contribute to closing this gap. Also, as lenders, Lisa brought up, and it's so true, that there's a huge gap in capital access between men and women. There's decades of research that back up the fact that, whether it is a female entrepreneur, a female-led venture fund, or even, microfinance, there is a historic lack of capital going towards women. So you can, contribute to a community development financial institution that has a focus on female entrepreneurs. You can get involved in giving microfinance loans in the developing world to female businesses. And, just in our networks, our female friends that are raising venture funds, you can contribute capital to that. And last but not least, the reason why we're here today as investors, we can increase the flow of capital to gender lens-focused funds and also advisors who participate in advocacy and engagement around gender issues. So, on the one hand, you have the PAC's Global Gender Equality Fund that invests, as does the State Street She Fund, in companies that meet certain criteria of advancing women and having more equity on the board level and management positions and opportunities for women. Or you could talk with your own advisors about pushing for gender issues in your own investment portfolios like we do here at Zevin Asset Management. We do that on a number of topics like paid family leave, closing the gender pay gap, and also board diversity. And so with that, I'm going to turn it over to Pat, that he can dive a little bit deeper into those topics and how we're trying to do that here at Zevin.
Thank you. Thanks for having me. So we are active owners, like a lot of the folks in this room. That simply means active owners, impact investors, shareholder advocates. That means that we use our investor voices once we hold a security to show up and push companies on critical environmental, social, human rights, human capital risks, and also goad them to seize opportunities. So we do a lot of that through the shareholder proposal process, and I can answer some questions about the way that works. It's essentially the way that investors in public markets and the stock markets can make a formal proposal to companies that then gets a shareholder vote. All the investors in the company vote on this at the annual meeting, most of which happen in the springtime. So it's a great way to, with any issue, rocket sort of a investor concern into the boardroom, put it on the agenda of the board and senior executive management, and also make sure that investors across the capital structure are aware of it. But it's particularly important, with a lot of the gender equity issues, a lot of the gender justice and racial justice issues, because these are issues that would fly under the radar otherwise. They're not under as serious consideration as they should be all the time. So we're using the shareholder proposal process on gender justice, and I'll get into 3 specific campaigns, but I think also there are a few other things we're doing as investors which are relevant to gender justice. We are simply, you don't have to be a fully blown impact investor or file your own shareholder proposal simply to vote your proxies in a way at companies that's in keeping with gender justice. That can mean you're voting for a shareholder proposal asking, say, eBay to disclose their gender pay gaps. So just make sure you're voting for it. Or working with your proxy advisory firm if you're a big institutional investor and you're receiving advice on how to vote at shareholder meetings. Instruct your proxy advisory firm about your interest in gender justice and make sure you're getting the right recommendations. But even where other investors haven't come up to companies and made an issue of gender justice, you can make an issue of it yourself in the course of your shareholder votes. So there's a lot of fanfare about State Street's commitment over the past year to withhold from corporate boards, withhold from all the members of corporate boards that don't include women. That's a good step. At Zevin Asset Management, we take a slightly more ambitious approach. We withhold from boards that aren't representative of the way the world looks in terms of gender justice. So we withhold from a lot of corporate boards, but then we communicate with companies on the back end of that so that they know why we're doing that. Well, it's because they're not half women.
Can I ask what you mean by withhold? So you're not making that investment, or
Oh, that's great. So we're investing in all these companies. We're voting our proxies with companies in our portfolios. And at the annual meeting, the board asks you to either support their nominees for directorships or you can choose to withhold your support. It's a vote against.
Okay.
Yeah, so we're doing that, and that's what State Street's committed to, and so we're hoping that the overall fund management industry moves more in that direction, follows State Street, and then eventually starts following Zevin and BCAM. Yes?
Did you say you vote against boards that don't have 50% representation?
That's my question.
Yeah, it is, and it's an ambitious threshold, but it's our policy is to yes.
Are there any companies that have 50% women?
No,
I'm actually serious.
Yeah, we withhold from a lot of boards.
I'm actually thinking maybe even I can't actually think of any company that's a large cap anyway that has a 50. Maybe there is.
Yeah.
I'm curious. If anybody knows one, please let me
There's
know.
only, there's only like 22 in the S&P 500 that have more than 30%, I think.
Yeah. So I think it's reflective of our philosophy on active ownership and shareholder engagement, where we're using every possible avenue to send a message to companies. Mm-hmm. And in this case, we're sending a message to companies by withholding from a lot of corporate directors. And I think actually our policy is to withhold support from boards whose composition is not reflective, generally, of gender and racial diversity. So there's a couple different dimensions we come at it through. We also do policy work. So we are involved in a coalition of pension funds and union investment funds called the Human Capital Management Coalition. And they're concerned with just getting better disclosure from companies on labor issues, period. It's really ludicrous that, in the course of financial reporting, a company is not required to disclose how many of its workers are part-time and how many are full-time, and what do its benefits look like, and maybe even what percentage of employees opt into the paid family leave program, or whether or not there is a paid family leave program. Companies really get to put their whole labor management and sort of gender diversity programs in the dark from the perspective of investors. So investors in the form of the Human Capital Management Coalition are asking for better disclosure on labor issues, and in the process they're asking for better disclosure on the way these companies treat women, the way gender equity is progressing within a company. So one advertisement or plug I'd put out there is that the Human Capital Management Coalition, which is led by the United Auto Workers Union pension funds and has like a lot of big state pension fund constituents, has just filed at the SEC a petition for a new rulemaking process to get labor issues into financial reporting. And that's an opportunity for all of us, for all of our institutions, to write a letter in support of that overall petition. But then along the way, we can make arguments for particular bits of gender justice reporting that we think are important and that we think that companies are ignoring and the capital markets need to know about. So that's a plug. Very quickly, we are more specifically engaged in pushing in 3 different vectors on gender equality. So there's been an existing campaign among investors the past 3 years or so to get companies to disclose and then start to close the pay gaps that exist in their workforce between, basically men and women who are doing the same jobs but still are being compensated, to the tune of maybe 79 cents on the dollar still for women. And that's a campaign that's been successful in the tech sector, where the discrepancies are especially wide, and there's a lot of pay that's at risk because it's a fairly high-earning sector. We joined in this work as joined with Arjuna Capital, another Massachusetts firm that pioneered a lot of this work, and we took the lead on extending that campaign into the retail sector, where these are big workforces, and the amount of pay that's at risk and that's unequal is not not as large in absolute terms, but the money that you're missing out on as somebody who works on the floor in a TJX is even dearer to you than it is for perhaps a tech worker who's earning a lot more than you. And there are also ramifications for morale. And certainly in workforces that are very diverse, have a lot of women of color are losing out in the gender pay gap even more than white women are, making 66 cents on the dollar for every, compared with white male counterparts. So we've had some success. We got, in the first year that this kind of proposal, gender pay gap proposal, including race and ethnicity, was filed at TJX companies last year by us, it received 17% support from fellow investors, which is, take my word for it, absolutely huge for a social-oriented proposal in its first year being filed. So we're pushing that conversation forward.
Can you talk a little about that campaign and maybe some of the company responses? Like, is the ask typically for the companies to just conduct an audit and make public whether or not there is a discrepancy in pay, or what are you sort of looking for, and have they been responsive?
Yeah, so this is like the nitty-gritty of shareholder advocacy, which often turns into negotiation with the company, where they will say, like, listen, we're studying these numbers all the time, take our word for it, there's parity. And a lot of companies in the course of this campaign, gender pay gap, gender pay equity, have gotten away with disclosing that there's 100% pay equity, or disclosing like some inscrutable percentage and not the methodology behind it. We're now doing the work of talking with companies to get them to disclose their methodology, get them to band together to agree on a methodology that's comparable with each other, and then, more importantly, agree on some next steps and best practices to close those gaps and be attentive to future gaps. And a lot of it is in consultation with their service providers. I was just talking with ADP last week, the paychecks and sort of payroll systems provider, which has a huge opportunity around gender pay equity reporting, and they're just chomping at the bit to help companies do this.
Right.
And the role of investors on this is really, really huge, because we have, everything is one step forward, 2 steps back. So this shareholder campaign was very successful the last 2 years. You had a majority vote at eBay for disclosing the gender pay gap. You had tech companies stepping forward on their own. But then almost, in the same year, the Trump administration quashed a rule that they were going to push through, that the Obama administration was going to push through, mandating gender pay gap reporting. So investors, as Emily was saying, really have a role in just keeping this fight up on our own, and we're proven effective in doing that with or without government support.
Have any companies voluntarily disclosed, either maybe due to resolutions or voluntarily disclosed an actual gap, or is that seem to be like too reputationally risky?
No, hearteningly, you'll see some companies that will say we're at 98%, we're not where we want to be, which is yeah, and they don't tell you, which job roles they're talking about, and there's not a lot of like line of sight into the specifics, but it is heartening that companies are, the fight that always happens between the lawyers and the people, the operators who want to improve on various metrics within the company, it seems like the operators are winning, or, found a comfort level where they can disclose what they are disclosing. Another vector we're working on is getting companies, especially in the tech sector, where obviously we have huge problems with gender justice. Like you can't, culture that allows someone to think they can, basically disguise or call a unhinged screed about women in the workplace a memo and circulate it widely and lead someone to think that there might be an audience for a document like that internally at the largest tech company in the world, or one of the largest tech companies in the world, is really off balance. And so investors have to provide a reality check for Silicon Valley. And that's certainly what a lot of campaigners are trying to do. Our little piece of that is we're taking the diversity and inclusion reporting that a lot of tech companies do, your Apples, your Amazons, your Alphabets, and even some of these companies have goals around the level of representation they want for women in their workforces, concentrating on engineering, concentrating on leadership. But then we're asking the very boring investorly question, and encouraging those companies to tie those goals to executive compensation. So we're filing a bunch of shareholder proposals on that this year.
Just a quick question on the sectors. So certainly the tech sector has been a big focus, and you mentioned the move to retail as well. Can you talk a little bit about why that additional focus and whether there are other sectors upcoming that you're looking to particularly target?
Yeah, I think the gender pay gap campaigners went to finance right after working in the tech sector because, again, there's a lot of pay at risk and imbalanced in that sector. We are focused on retail because a lot of this, it's a materiality analysis. That's where a lot of our holdings are. But there's a great intersectional justice component to working in retail because the often single earner families that rely on women, of color, they're in the retail sector, and we find them there. And any gains that we can be making for women in that sector are really multiplicative for families and families of color. And just the last initiative that I'll highlight is tied to the first two, actually, because we talk about pay gaps, we talk about inequities in the workplace, and there's often just a single level analysis that happens with that, where it's like, okay, well, Google, close your pay gap and just do it, throw money at this problem. We want to get closer to a root cause analysis of how do pay gaps, how does inequities in the workplace start to prop up to begin with, and that's why we're working on paid family leave. Poor paid family leave policies are basically one of the major things that can derail a woman's career in the course of her life cycle at a company. She might be able to come back to work, but perhaps it's too soon, or because paid family leave is not generous enough, or if paid family leave does not exist, she'll have to leave the workforce for a year and a half, and then come back at a level where she can't quite pick up her career where she left off, and that's where the pay gaps sort of start to fester. So we filed first ever shareholder proposal at Starbucks this past year, focused on the gap between paid family leave offered to retail employees and that offered to headquarters employees. And we're getting some traction on the overall issue because quietly the company changed its policy to address one of our concerns. Prior, the company didn't provide any benefits for adoptive parents in the stores among baristas, and they quietly changed it to include adoptive parents, which helps out LGBTQ families a lot. But we're hoping to have a broader conversation with them about how they can make their benefit more generous and then serve as more of a model to the sector. Yeah.
I'm just really curious, why were they quiet about it versus vocal?
You've touched on another sort of element of shareholder advocacy. A lot of times you'll be, one of the voices that a company is going to hear from, and in the end, kind of the decisive voice, because a company will have been receiving campaign, attention on a particular issue, but when investors come in, it becomes a business issue, and so they'll then want to make a move. But they don't necessarily want to attribute that change to any one group or set of pressures they had been receiving. So in this case, we got a pretty confident analysis from a partner, a think tank we've been working with called Paid Leave for the US, that the company was going to unveil certain policy X, and there was a change from that policy that got more generous after our intervention. So we'll take it however we can get it. And so that's the three areas that we're working in, and I think each illustrate the role that investors can play, even as we have an administration that's moving backwards, that's not in line with gender justice at a really elemental level. Yeah?
I'm sorry. I just wanted to add one dynamic to the paid family leave campaign that we are conducting in conjunction with PLUS, because we are actually advocating for equal paid family leave between men and women. And that is because there's like such a social stigma about taking time off from work to dedicate to your family. And if we're still under the structure that only women are, anticipated or required to be home with a young and growing family, then whether that is in place for men and women to take, if we're not taking it equally, we're still going to be at a disadvantage at the end of the day. So it's really sort of like a more structural, societal, understanding of that it's important for both men and women, both and adoptive parents and LGBTQ families to have the same amount of leave and dedication at work and at home. So there's no longer a stigma attached to taking the time that hopefully you're allotted from your work.
And as with the arguments we just have to make across gender lens investing, we're coupling that societal argument with just the fact that this is good human capital management for the companies that we're engaging. If women are able to come in and pick up where they left off and basically maintain employment with a company, that contributes to lower turnover and reduce training costs into the future, and the research on that is mounting. So we're reminding companies on that as we go along. And I really appreciate to see all the interest here, and I'd love to continue this conversation with all of you.
So my question was about the human capital management. Is it an initiative or
Coalition.
Coalition. So within their asks around human capital management, are there specific ones related to gender equality? And is there, as I'm looking for like a framework, a set of questions, do they have some specific things that they're asking?
Yeah, so it's a fairly long petition, and the overarching ask is for companies to basically open the door and shed some light on their employment practices. And in the course of that, I think because it's just like the way this kind of thing has to be done to the SEC's satisfaction, you offer particular metrics as suggestions, like this is what this disclosure might look like. And gender sort of like workforce composition is in there. Benefits, which might map onto gender justice, like I'm saying, like paid family leave, are in there. I'm not sure if gender pay gaps or some of the more specific metrics that would be ideal for us and that we really want to push for as gender lens investors are in there. That's why it's so important for really everyone and their mom and grandmom to write to the SEC in support of the proposal, and in the process make clear, here are some other nifty metrics that would be great to see in a 10K annual financial report for those at home. And they'll take those anytime this fall, I think. And I'm happy to consult with folks about the process for sending a letter of support.
Awesome, cool.
Well, I don't know if there's any questions or answers around any of the engagements that Pat was talking about, or just generally like gender lens or socially responsible investing. So I'll open it up now for questions. And if not, I'd love to hear, what all of you might be doing at your own firms where it comes to, gender equality.
It's just a great presentation. Thank you. And thank you for all of the work that you're back to the tech sector and the success with some of the engagements over the past couple of years. Can you talk a little bit about the different factors that went into, as you observed it, making that happen? Kind of because it's been certainly a long-standing issue around this, and it seems like there's been certainly a drumbeat of different breakthroughs, including the companies that you mentioned. So what, from your perspective, what went into kind of what was the tipping point there to see that progress?
Well, folks in the room have been watching this along with me. So does anyone have a thought?
I actually think that the media played a very significant role, that there's a number of sectors. I was thinking about in asset management, frankly. So we are currently involved in a gender equality engagement with 8 of our portfolio companies. The focus on finance and pharma, but not basically I just identify companies that we voted against because of inadequate board diversity. And we have we're overweight pharma. We are overweight pharma, but we're overweight financials. Financials is really my focus, and I was thinking about those sectors where. So I don't know. So tech, which has a broy culture, which is as is perceived in the general. So I was thinking about tech has gotten a lot of attention for that broy culture, but I think about why has finance gotten away with it? We work in investment management. I mean, I work for a women-led firm. Zevin is a women-led firm. But our firms are very atypical.
Well, I was studying for the CFA when I first started here, and I said it's the only place that when you would break, there would be a line for the men's room that was 4 times as long as that for the ladies' room. And it is something that doesn't often come up. And I mean, I think now there are more engagements with finance companies on closing that gap, but it's still a very quiet. You don't hear it the same way you hear it in the tech sector. So I'd be interested.
It's just and frankly, it's just as extreme. And like tech, your IP is all you have. It's your people that are really your product.
I think I have a perspective. I think a lot of it has to do with right now tech is sexy. Everyone wants to work there. You think about the foosballs, like the fun and so forth. But no one talks about this really strange, insidious culture behind all the smiles and the freebies, which is basically what finance experiences, but in a quieter sense. So I think a lot of it has to do with. I think people started focusing, and then all of a sudden it became about tech. Because everybody, like all the millennials want to work there and so forth, and that's a large demographic. So inevitably there's sort of like an attention to there. But then on the flip side, you talk to some of the women, and you think that you're talking about like these old school investment firms.
How many women are, what's the difference between men and women in the percentage of women in finance and tech? I'm guessing it would be a little bit lower.
So look, the off-credit statistic is around how many actual fund managers there are, which is about 10% of fund, like actually managing, like a portfolio manager is about 10%.
Right.
The representation across at senior levels, kind of. So interestingly, it's similar at entry, which is not surprising, and it trails off as you go up. And I think it's around 22% at senior management, executive management, but senior management. In finance.
Oh, sorry.
Yeah, and typically at the major tech companies, it's representation between 20 and 30% at those senior levels.
So it's not that different. So I'm just astonished that finance has kind of got, not a pass, so to speak, but the culture, many of us are fully aware of what the culture is like, and it's.
But I think she's on to something. I think it's a sexy place to work, and I think it's also too, it's because it tends to attract a younger crowd, which tends to put a focus on it. And you figure men have been dominating the financial services for years and years and years, and it's also dominated by older men, and I think that's part of the reason why it flies under the radar.
I think too it's because that people have access to all those products that the tech companies are making. So people see a part of themselves in like Uber, Facebook. People use those things every day. Whereas Goldman Sachs, people are like, well, it's a huge bank. I don't know how that affects me. So I think sometimes from the reputational risk standpoint, everyone sort of sees a part of themselves as implicated in these decisions that those companies are making, as opposed to maybe big finance where they don't see that much of a connection.
And it's concentrated in certain groups versus what you just described.
Yeah.
And do any of you have, experiences at your own firms where you would like to maybe talk about gender equality issues. Like, I know, Lisa, you work for a female-owned firm, so it's a little bit different, but you understand that it's not very indicative of what's happening.
Yeah, so we became a signatory to something called the Women's Empowerment Principles, I think almost 2 years ago now, which is a UN, it's an initiative advocated by or promoted by UN women. And it's a set of, it's kind of like the Global Compact, but focused on gender equality. There's 7 principles, and we've tried to use those principles and try, mostly it's around the governance, how gender equality initiatives or how that's promoted and how it's really how decisions are made around that in the firm. What's the accountability structure for that within the firm? So those are the kinds of. So I really like your framing pad and how you've kind of broken it out in kind of 3 discrete, paid leave, gender pay gaps, and border diversity. When I came into working at Boston Common 4 years ago, we were very focused strictly on border diversity. And I would like to broaden and deepen our discussions with our companies to talk about the full kind of promote the recruitment, retention, promotion.
And when you say border diversity, do you mean specific to gender, race, or is it looking at broader background experience?
So we talk about, so gender and race are 2 issues that are front and center in terms of our votes against boards. If they have inadequate gender and racial diversity, we don't have as quite a high threshold as we would be voting against a recent company of our portfolio if we did. We vote against boards that have less than 30% representation of women and that don't have at least one racial minority on the board. In the United States, we have slightly different voting thresholds in Europe, or rather in the UK. In Europe, the racial issue is something very difficult to get at. And we vote in Canada, Australia, we have slightly different voting requirements in Asia, where we're focused on gender as opposed to race. So that's kind of the minimum threshold, and then we want to understand how companies are, because so often it's really around board tenure, refreshment of the board, having.
So the age, there's age around it, yeah.
And board, depending on the company, the average age. We had a dialogue with a company where frankly, he was the chairman emeritus, but he's 82. He's been on, he's been with the company for 50 years, so.
I'm wondering if, Lisa, in your work or Pat, in yours, if you can point to any kind of best practices that you've seen in other companies or other countries that are probably further advanced in addressing these issues than we are.
So it's anathema here, but quotas work. Quotas work in Europe. They've been very effective at getting more women.
For gender and race? Or?
No, not of race.
Not of race, okay.
When you think about it, women represent 51% of the population, so it's really, to me, it's a no-brainer. If you're not, if you don't have adequate representation from half the population, there might be something wrong with the structure of your, how you're recruiting, your retention, and there's lots of reasons, as Pat pointed out, around paid family leave being a huge one.
Yeah.
And people treat recruitment of great women as like this conundrum here in the United States, and it should not be, even in like the engineering and tech fields. It's just that the way that the first thing that occurs to most U.S. companies, I'm using like Facebook as an example, is to change the incentive scheme, to make to make more equality of opportunity. So they'll start paying their recruiters double points or sort of double incentives for recruiting or getting a woman or a person of color into the pipeline for a new engineering job. And then that recruiter is like incentivized to work that person through the system to really get to know their qualifications, to get to know where their fit might be in the company. And then without a quota or without some upper level of attention to the issue, those people run into a buzzsaw, because the last interview is always with the hiring manager, who brings all of their unconscious bias and sort of lack of buy-in to this process to that meeting. They ask questions like, where'd you go to school, and what was your experience like with Greek life? All the bro-y questions, and those people drop out of the system. So that's a point for the way the Europeans do it. I think a good practice that we could look for in the States would be to go beyond like there's just one dimension of workforce composition reporting, where there's just a pie chart and you see how many women there are, to more specific reporting on a cohort that gets hired, and how many of them are promoted within 2 years, 3 years, how many of them are retained within 2 years, 3 years. So the company is like attending to that, and that we as investors can make sure that their eyes are on the right sets of data, and not just like these snapshots that they show us.
I think the retention is a really important one.
Yeah, and on a similar tack, not related to board gender diversity, but related to CEOs within the Fortune 500 and gender diversity there. It also seems that there's a little bit of an unfair penalty, given that because there are so few female Fortune 500 CEOs, that it's such a small sample size, that if you look at company performance and you're looking at kind of, or generalizing, as sometimes happens, about kind of women-led organizations, because the sample size is so low, it's a skewed perspective. So I think that can be very problematic as well, in terms of then advancing women to the CEO level in that cohort.
Did anyone also see the Harvard Law School's Forum on Corporate Governance article about female CEOs are more likely to be targeted by hedge fund shareholder activist campaigns than males? That was, I don't know if that was particularly recent, but it's worth checking out, because I thought that was very interesting finding.
And there's probably like some correlation or sort of an overlap with what you were discussing. It's like, if we're hiring female CEOs to sinking ships, that's not fair. That are targets for takeovers themselves, and then that doesn't comprise like a great data set for drawing any big conclusions.
I think there are statistics around too that more often than not, for a turnaround situation, that is when women often first get their first experience in leading a firm, is they will go in and they'll take the turnaround opportunity. And whether they're successful or not, you know, I don't know the statistics around that, but you will find more women taking those opportunities than men.
I will try and dig this out because I can't think of where I saw it, but one of the things I came across is that, so there is the problem of expecting only recruiting C-suite executives, and so the pool of women and minority candidates is smaller than it otherwise would be if you would broaden your lens. But interestingly, when women are recruited to the board, they tend to be much more qualified than their equivalent man. You know, if you put two board members beside each other and one's a woman, then she's way more qualified. So the bar is much higher for women, and there's this embedded unconscious bias that we aren't seeing that is requiring her to be like a superwoman, essentially, before she can be considered for a C-suite, whereas it can be Joe from the golf club.
Right.
You know, it's a man. So I think our role as investors is really to call it out.
I'm wondering, I don't know how this would be tracked if it's with retention, and I like the tracking the cohort through, but you know, track the mentorship and the what leads a woman to get to be that qualified, you know, and how you could make sure or know if a company has those internal systems in place to elevate women accordingly.
More than mentorship, they're talking more and more about sponsorship being important, which is like having a specific sponsor who guides you, who introduces you, really, who actually essentially imbues you with some of their credibility.
Somebody internal to the...
Someone can not necessarily, I mean, it doesn't have to be internal to the company, but we've seen, so one of the companies I'm looking at is Merck, which actually has some really interesting programs, and it just I mean, it has 3 women on its board, but it's got a big board, so it doesn't meet the 30% threshold for us. It also has an African American CEO who, you know, was one of the first to leave that.
President Trump's.
Yeah, I don't know. I was like President Trump's like
his business council.
Ego thing.
Forgot about that.
He was exactly. So, I mean, you know, when I looked in depth with them, I'm like, oh, you know, despite the fact we voted against, there's actually some interesting things. So it'd be interesting. I'd love for them to tell us about how. So there's stuff about their mentorship and even some sponsorship programs. What I'd like to know is like, what are the results of those? Right? It's like great that you have these initiatives, but you know, can we use you as a best practice example to illustrate how successful you've been?
I thought a lot about this issue of capacity building because, granted, I'm in the private company space, and I use this example my husband's company, which was a venture-backed tech firm. And when I looked at the board members, every single one of them was white, male, and over 50.
Mm-hmm.
And so I said, how come you guys, what's up with this board? And he said, well, I've talked about it, and he was on the younger side, his other founders were older. We just can't find them. And I just feel like that's just a really lame excuse. But on the other hand, how do we, maybe it's through sponsorship as opposed to mentorship, but raise the kind of the awareness or the profile of women who are perfectly well qualified, and it's like, as you're saying, they may even be more qualified than some of those men, and get them into those places where they would be noticed. There was also, there was a Harvard Business School review that talked about, again, this is in the private company space, but for getting access to venture capital, the questions, I don't know if you saw this, the questions that were asked to male entrepreneurs were different than the ones that were asked to women. And the ones focused on men were how to deal with growth and a market opportunity, and men answered in kind of along those lines. And the questions that were asked to women, and I'm assuming these were probably maybe mostly male VCs or male investors, had to do with risk and potential problems. And women answered those questions. And so I'm kind of wondering, there's almost like a twofold educational process that has to happen. What this article was saying is get the women to answer the questions like the men do,
Right.
but on the other hand, you have to educate the men to stop asking those questions and to ask the questions that are, I think it has to go both ways.
It's very deficit-based.
Yes, exactly.
Yeah.
But you find it like across all sort of, not just venture, but like all sectors. When you look at women politicians and their interviews versus male politicians and their interviews, like oftentimes it's like, well, how do you balance family life and work? And I was like, why don't we never ask a man that question? I mean, is it not as applicable to him as it would be for a woman? And so a lot of this, again, is all very ingrained and, unconscious bias in the way we talk to women. And, I can't say that in a forum like that where I got to ask a representative a question, I wouldn't be thinking the same thing, because every day I'm wondering, am I balancing it correctly? Am I doing well enough at work and also at home? So, I think that even as women, we have that in us, and we have to fight against maybe the natural tendency to ask things in that way. I'd also like to just do a plug. We're asking about how do we get this mentorship opportunities or, networks. Take the Lead is a great resource. They provide training, curriculum, courses, mentoring and network opportunities for women, and they are, very aggressively trying to reach this gender parity of women in leadership positions across all sectors. So we're talking, the political arena, the corporate arena, by 2025. And so I think that there are probably other events like this in the Boston and New York area. There are probably networks within Take the Lead that, we could join, whether we're interested in the finance part of it or not. So just a plug that, they're really doing a lot of great work in this area.
It occurred to me when we were chatting, I think, like we were talking about Merck. I don't know if you guys are familiar with Parexel, but they are actually, and I know this because a friend of mine works there, they're focused on gender partnership. And they literally have had speakers, and not only just in Massachusetts, because they're a global firm, they literally do programming around this. So their whole focus, their D&I focus currently has to do, and they call it gender partnership, because they also ensure that they want to make sure that the male leaders are involved in the process. So they took out the whole idea of it has to be women's only, and they're like, it doesn't make sense that we're advocating for this, and yet our leadership is comprised of men. So that might be, I'm happy to make that connection, but I know that they're doing a lot of work around that.
Is it a private firm or a nonprofit?
I believe it might be public, if I'm not mistaken.
What does it do?
They're a clinical research organization. They work with a lot of pharmaceuticals.
Yeah, just following on that, like, not to put too much importance on, say, the Kevin Costner character in Hidden Figures, there's like the male sponsor who can be helpful, right?
Right.
But not to put too much importance on that, but what I'm hearing as the X chromosome holder in the room, Y chromosome holder, is that, I should take take some more biology, is that a lot of the things we're talking about involve men, let's be real, stepping back in some ways from power, or before men rush to grab the nth opportunity to think about who's around, who do I know, what is the power and the fulfillment and just the career sort of, satisfaction that flows from empowering someone else rather than grabbing something for yourself. So, yeah.
So the Wall Street Journal published maybe a month ago a special section that was a result of research that was done by the McKinsey Institute in cooperation with leanin.org. So I think it might still be available online if you Google it. But what I wanted to mention is that one of their findings was that men believe that when there's 10% representation of women at senior levels, that's equality.
Yeah.
Men reported, we have equal numbers of women when they actually had 10% representation of women. So we really do need male allies, was my point there. And we
And
need to,
quotas.
listen, quotas work, nobody likes to talk about it here, but they work. They force people to, I'm not sure, I don't believe that we have any likelihood of getting a quota imposed at the board level, for example, by the SEC or, but when you have requirements around, so part of it is just getting people in the room, another part of it is like having expectations as they go through. I love the idea of following a cohort through it. It's interesting.
There are two other resources that come to mind. The topic of mentorship. There's a nonprofit organization called Power for Parity that was founded by Ellen Kullman, DuPont's former CEO, who led the company through a very contentious proxy battle a number of years ago, I think in the mid-thousands. And she talks about her experience rising up the ranks of DuPont to eventually becoming the CEO, and saying, I just thought this is what happened. People were just promoted. This is just how it went. And then she realized when she got to the top, it was almost like a glass cliff situation. She realized that this was not what was happening, and that it was very difficult to be taken seriously at the top. So she founded that organization to really provide those mentorship opportunities and work specifically with the private sector to get more leaders and more female leaders in positions of management. Power for Parity. And then the other one, when you're talking about where do we find these women, are there lists of, are there binders full of women that we can get I do know that there's the 3D Equilar database that I believe CalSTRS and CalPERS founded, right? So that is specifically dedicated to finding women who are qualified to be nominated on public company boards.
I've recommended that to some companies as a source.
Yeah, it's called
Women can also self-nominate.
Yeah.
The diverse directors data source.
So the 3D is the diverse directors data source.
And women can self-nominate. They can contact. In fact, I'm happy to. I can send it to you, Emily. Because I have a little like a note from the person who's responsible, which I send out to other people, and there's a link where you can request a form. Sometimes they actually troll through other so they may have, you may be in there and you might not even know it. If you're a very senior corporate woman, but if whether you are or you aren't, they encourage people to update their
that's really cool.
Their profile.
So we housed that database at MSCI for a while before it was sold to Equilar, and there's a lot of statistics within that, understandably, for all of the potential female candidates, and I think we now have a lot of that governance data at MSCI, but for a while we were doing research on that database and essentially disproving this pipeline myth, right? It's just simply not true, and with women who have a certain level of experience, they also have the qualifications, and we just did sort of a comparison in a couple of our studies, I think probably from 2016, 2015, really just disprove that myth.
That is our argument of the 30% coalition as well.
There's data there.
We're focused on stimulating demand because we argue there's adequate supply.
I think also schools, so if you get in touch with their alma mater, I know my graduate program does that. They actually have a group that is focused on getting more women graduates of the school into corporate boards. And I think there are a lot of other, certainly at the grad school level, but I think at the undergrad level too. I think there's efforts. And if there isn't one, I would encourage you to push your school to do it, because they're often in touch with their alumna who are, you know, who are high profile. So if you can kind of get, you know, kind of ride that train, that would be a good way to elevate that.
Another local organization, the Boston Club. I was at their corporate salute last week, and they literally were like, for any men or companies that tell me that they can't find qualified women, we have a database. Because our whole like membership is based on like high-level executive women.
Yeah, two other resources. One, really, there's the Women Advancing Venture and Equity. They do meetups. I think they had a lunch this week in Boston, but they do events with the purpose of gathering women together. But I think they also have men events as well, speakers and other folks. And then speaking on the school front, more related to women in entrepreneurship and making sure capital goes that way. Babson College has both a very heavy research arm with their Diane project, and then they're doing all these pitch competitions for young women entrepreneurs and giving out, it's not that much in the scheme of venture capital, but it's at least a start of elevating why women are doing amazing things and should be funded. So they have a nice newsletter where it's just like, I feel good. And highlighting just some of the great projects on more of a local level. And some are Babson students and some are just women in the area.
I just highlight as an aside that the way people tend to get counted, whether it's in VC funding or by the big corporates we talk to, it's just like particularity of the way things happen is that they'll count women and they'll count people of color, POC. And that's fine, but in the aggregate, people are finding is that this tends to give short shrift to women of color, the intersection, because you can meet your numbers in each of those categories and still be misserving women of color. So that's one thing we're focused on with big corporates that we're doing engagement on as well.
That's great. Yeah, because there's typically no intersectionality.
Yeah, a lot of times it's, oh sorry.
No, do you just ask about those stats? Like, how are you
A lot of
getting
times,
at that?
Yeah, I think like, what at a minimum we should do as investors is tell them to break out an initial category. A lot of them don't. And then we need to have that conversation of like, what is it that, beyond what women need in your workforce to be nurtured and retained and promoted, and beyond what people of color need, what is it that specifically women of color in their, intersectional identities need? And are you giving it to them?
This is great, by the way.
Oh.
Yeah, I mean, this is my first time, so I'm so excited that I'm among peers that are like, I don't know, I think it's really a great group.
Yeah, and as we talk today, are there other sort of gender equity topics that as investors you are incorporating, or just through our discussion today you were like, oh, well, we've thought about paid family leave as one of those areas that women take a step back and maybe a gender gap starts there or grows there? Is there anything that we've missed that so far that you can think of?
We all know that the general, like the policy environment for initiatives that come out from the federal government or from the SEC is likely not going to be favorable for the next several years. So I just think that investors want to tap this I was kind of aware of this human capital management collaborative or coalition, but I haven't looked at it in any detail, so I definitely want to check that out.
And there's a new report it's I think put out by Harvard Law School and the Center for Health and Human Sustainability, some acronym, but there's an overview of like all the different players in the human capital world, and then an analysis from the most recent Robico Sam's corporate sustainability assessment on human capital metrics. But yeah, they did a workshop recently at Harvard Law School, so it was you need like a primer of all that's been happening in the space. I found that really helpful because the human capital also seems very not human.
No, it's true. There's nothing about human design, nothing.
Yeah.
Metrics. Something that I would be particularly interested in, a study came out recently about how valedictorians from high schools then on through college are predominantly female, and so this, even at the very early onset of like pipeline and nurturing someone to then rise up to a leadership position seems to not be nurtured at the young age when it needs to be. So I think asking companies maybe about entry-level positions, because when we go back to this, wondering why it's not called out in finance. When I graduated from BU, I started right in the finance field. This is totally anecdotal. Any new entry-level female that came in as an assistant. So they were pushed to sort of an administrative side of the work that was happening in the finance field at the company that I was at. And the same degree from the same university would start off as an associate, where they were actually getting into the portfolio management. So I'm wondering if that very